This is a real B&H customer story. Jack and Barbara, professional wildlife photographers.
Guten Morgen! Ja, ja! Yeah, yeah. Yeah. I need bigger speakers for my office. I need bigger. I need more. Hey, good morning. Good to see you. Johnny's going to be running the snowblower all day. Yeah, New York City got 2 feet of snow yesterday. Right now I'm looking at a gray lake and gray sky, big tall Georgia pine trees and oaks. Gray, cold, high ceiling. I mean, I don't know, clouds are probably 10,000 feet. Just sort of meh. I was so desperate the other day, I'm like, I just need time to think. So I took chairs from the side balcony and I moved them to the to the garage, and it was raining and cold, and I opened the garage and I bought a space heater from Home Depot, and I got the space heater there, and I'm sitting on my nice chair, and I got a cigar and everything, and I'm like, and I got my laptop, and I just want to sit and think. Just sit and think. Why can't I have some half decent? Anyways, it was still too cold, even with the space heater on. I'm like, oh my god. So that's where I am. We're in the depths of winter. How do I regenerate the mojo, right? So I need warmth. Oh, I dream of Miami, as Bugs Bunny would say. You're 2 hours north of what, Johnny? NYC? So you probably, yeah. How White Plains? I guess you're probably farther north than that. What a beautiful part of the world, actually. Most people don't know that. You can fly into New York City, rent a vehicle, and 2 hours later, it's so incredibly beautiful. The beautiful trees. That's a nice place. Sir, I have a question. I haven't even started yet. How could you have a question? I haven't even started yet. All right, so let me start then, huh? Can I talk today about the seasonality of the year? What months? No, take the course, dude. And which month should know? Take the course. Take the course. Pay money. It's such a big question. Yeah, but take the course. fxbootcamp.com. All right, so let me mark this. Okay, so it is 8:04 in the AM, 222021. Welcome to Forex.Today YouTube community, but you might be on Twitch, you might be on Facebook, but the YouTube community of 17,000 foreign exchange traders. We gather this time of day to align our satellites and get our game set. So without further ado, 3, 2, 1, hit it! Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Mano says, "Hey, I heard me say I'll be moving to 9 a.m. Yeah, I did say it. I probably should. I forgot about it. It's a good idea. I forgot that I bought a car. And what that does is allows me to spend more time with my children. So anyways, I probably should do that. Anyways, hey, ask questions, get involved. My name is Wayne, by the way. Nice to meet you. I've been doing this here on YouTube for about 15 years, I guess, as long as YouTube has been a YouTube. I was essentially a beta tester on YouTube. Can you imagine a time where you would go to YouTube you would type in the word Forex, and I was the first like 15 pages of results. Can you imagine that time? Each page would have, I don't know, 15 or 20 results of my videos, and then the next one. So I had hundreds of videos on Forex on YouTube, and someone else came along and said, hey, I can make a bunch of crap content and crowd this guy out. Boom! There you go. So anyways, it's kind of interesting. So if you're on the FX Bootcamp YouTube channel, there's thousands and thousands of videos there. Very cool. And before that, I was just using webinar software before people even knew what a webinar was to broadcast my charts live and teach people everything I know. Why? I found very early on in my career, after I quit my beautiful job, gave up my awesome office, gave up the job I loved to become a full-time Forex trader out of my home office. Then I found out it was lonely. For lack of a better word, it was just lonely. It was dark. It was cold. It wasn't fun. It wasn't beautiful. It was hard, long, boring. And then that became dangerous. It became a risk. Yeah, my performance started to fall because I was all alone. So I said, well, how am I going to fix this? So I did a business planning retreat with myself, and I said, hey, how was I successful in all the other endeavors that I did before becoming a Forex trader? And I always surrounded myself with like-minded people. So I said, well, if I just use this webinar software, I can broadcast my charts and talk and teach. And maybe I can find other people that are interested in Forex too. And I will teach them all the things I had figured out over years. Because remember, there were no books, there was no training, there was no videos, there was nothing on Forex. So I was self-taught. And I'm like, how am I going to gather like-minded people that are stupid enough to be Forex traders? And here we are. So 20 years later, here I am. I'm still here every single day. Every day. Every single day. Pretty cool, right? So thank you for being here. Thank you for the positive energy that you give me. I'll be frank, I didn't want to do today's webinar. I thought about 9 different reasons why I was going to wimp out today. And I was thinking about it yesterday, like, oh, I could pretend I'm sick. I am actually not feeling that great. I could pretend like the internet went out. I could fake breaking my leg, like, oh my God, I stepped in a bear trap yesterday. I can't do my webinar today. But, you know, I didn't. And so thank you for giving me the strength I need to get out of bed and do what needs to get done every day, day after day after day after day after day after day. So thank you so much for giving me that positive energy, because that's what we need. Thank you. So I hope to do the same to you, inspire you to do the best you possibly can get done. So ask questions, get involved. This is a learning experience. I'm not here to put you into trades. What we do is we talk about the trades that are likely to happen in the near future and why. What you do over the 23 hours after that, I don't know. Okay? I don't know what you do after, whether you take the trades or not. I don't know what you do, but you know that's the real challenge, right? Like, think about it. Like, if we go over a technical or fundamental setup, it's very similar for you on your own doing the same sort of analysis. You'll learn how to do it. But isn't it interesting, the gap between your thought process of, oh, I'm a buyer or I'm a seller, versus you actually being a buyer or a seller? Isn't that like this dichotomy? They're two different things. And you can't be a good trader if your trade plans suck. But then the next thing after you get learning how to plan technically and fundamentally properly, then you still have to become a trader, which means you can execute your thought processes and plans, right? And then on top of that, then once you can actually pull the trigger properly based on good intel, now what? Well, then there's still things like portfolio management, risk management, all this kind of stuff that goes in. There's all these other layers. And then if you ever want to start your own fund one day, well, once again, there's a giant layer on top of that. Because essentially now you have to run and market a small business, a regulated small business. The complexities are amazing, but let me tell you, if you get it right, you get paid too much money. Yes, almost like execution is not easy, but it's a skill, right? And unfortunately, most people show up to Forex and then, of course, to other trading too. Like you could be an oil trader, you can be a wheat trader, you could be a gold trader, whatever. You could be an equities trader. On top of all of that, we still have these things where people show up, they don't really know what they're doing, so they're focusing on execution, but they don't have any strategy. So like that ain't ever going to work, right? So I would recommend, and I do recommend every day, you focus on the strategy first, fundamental analysis, technical analysis, so that you can analyze versus trading. Don't worry about the trading, because once you get the analysis part together, cool. Then we can focus on the execution versus the other way around. Most people start with execution and never get to the finish. They never get anywhere, right? Cool. So, yeah, so ask the questions, and I'll do my best to give you answers. I probably won't get to everything today, but I'll do my best. And if I don't get to it today, let's try to get to it tomorrow. Okay? Daniel says, in the art of war, tactics without strategy is the noise before defeat. Yeah, that's beautiful, right? One of the things that I used to talk about before is that an honorable general wins because many plans are made. Another way of looking at that is you can still win without any trade planning, right? But it's very dishonorable. It's a form of gambling. And I think the worst thing that could ever happen to you is you make a lot of money quick based on just luck. Luck you can't repeat for the next 25 years, right? On a regular, consistent basis. So the worst thing you could do is make quick money, because now you'll have to lose probably 5 or 6 times more to realize that the first wins were luck. So like if you make 5 lucky trades in a row, it'll take you 25 losing trades just to get you humbled enough where you can be open-minded, right? And so in the art of war, they discuss like you attacking a fortified position. You could win that. It'll be long, drawn out war. You'll probably lose 10 times more people, but you'll take the castle. You'll take the fortification, but you'll lose 10 times the amount of soldiers. And that'd be a very dishonorable victory. The best victory, of course, is the one you never have to fight. And that's through all planning, right? So anyways, I guess the analogy to that would be collecting 300% a year in interest, doing nothing different. Okay. Cool. Yes, so RBA statement, we covered that yesterday. I'm sure you got that covered. Okay, so great. So let's take a look at this over here. Okay. I said the disclaimer. Oh, you know what? I forgot. Please visit tradersway.com. They're a part of our community. You need an execution partner. You need one that's stable. And through multiple crises, like the Swiss National Bank debacle that put FXCM out of business in the United States and put Alpari out of business permanently globally. Those were big brokers. They went out of business because the Swiss National Bank lied to the entire world and jolted the markets and bankrupted those ginormous foreign exchange brokers. Trader's Way was absolutely totally fine. That should speak volume. And you're like, well, how did those other ones go out of business? And how did little tiny Trader's Way survive such market volatilities? perhaps they weren't betting against their own clients. If that's the type of partner you want, the one who works for you, not against you, maybe consider tradersway.com. Open a demo and see if they can earn your loyalty and respect. Okay, what do we got here? Dollar still strong. Huh. Whale oil B. So it was strong in the first week, strong in the second week, weak in the third week, strong in the fourth week. And now we're in February, dollar's ripper strong. Whale oil B. Who would have thought that, huh? So now what? Well, with dollar strong, euro should be weak. So I've put that into play. That's one of my strategies. And down the road, I think the opposite will be true, but not quite yet. So the play that I've been using to describe that is Euro-ZAR. I want to be short USD Rand. But right now, based on timing, things like seasonality, I want to be short Euro-ZAR first. But in the long run, I think this will be sideways. So going back a couple of weeks, putting this all into perspective. Okay, this is this. This is the second week. Let's put this together. Make this a little fatter. Okay, second week, second to third week, right in here. False rally, new move down. Is the plan, right? Part of that plan technically now is a 618 Fibonacci retracement, which predicts downward motion toward a 1382 extension below us. Okay? 618 to 1382. Okay? So that's what's in play here. So on Sunday afternoon, I shorted here because that was the plan from last week. And then taking a look at that, that trade is now up the relative valuation of 217 pips. The other one is up 400 pips. Okay. You'll see my Aussie trade came off yesterday, -3, but I still have 20 pips on the Kiwi trade. All right. So 200 pips since in one day on Euro Kiwi. Very cool. Okay. So you can see that I'm short exactly at the central pivot point, exactly the first hour of Sunday. Okay. Cash. The way I look at it, cash's U.S. dollar strength is more of a squeeze on U.S. dollar shorts. Yeah, that's the current language for sure, like short squeeze and stuff. I look at it as just the normal ebb and flow of, let's say, like you could describe it in a similar way, like profit taking. Okay, so I describe January as a profit taking time. Okay, this is why I prepared everyone for the drop, or in this case, the rally in the U.S. dollar would occur in the first week. Now, what happens is there's this process of slowly coming down, slowly knocking more people out, but that's not quite the right description either. Is it short squeezing? It could be. Is it profit taking? Yeah. Is it just normal dollar strength? Yeah. I mean, it's all of these things, right? It's all these things. All I know is we said the dollar's going to be strong in January and February because it's supposed to be. Even though I'm a bear, that's that. So it's all of it, right? Zamo says perfect technicals on Euro-ZAR. No, it just is. It's just a trade. That's how you're supposed to trade. That's it. Okay, that's it. Okay, that's all. So the wild and crazy prediction is this was supposed to start this move here, because we know if this was euro dollar, then euro dollar would fall. It's not even a rand trade per se. It's just this. Euro's going to weaken because dollar's going to strengthen, right? Like, whoa, it's such a giant leap for mankind, right? It's a relative strength play. This is why I think ultimately it's going to be mediocre. This isn't even a good trade, okay? But going back to like perfect technicals, no, it's just a trade. Like, look, this is a sell. We knew it fundamentally. We knew it emotionally as well as intellectually to get ready to sell that. Then the next week, that's a basic boring sell. The next week, this is a basic boring sell, okay? And then this is a basic boring sell. It's not perfect. They're just trade setups, right? Like this is the sell. Oop, let's do this in pink. This is the sell zone by definition. This is the sell zone by definition. This is the sell zone by definition. Now, sometimes they're perfect, sometimes they're not. This is a sell zone by definition, not by opinion. That's the cool thing. Like, that's why, I mean, these are just swing trades out of the swing trading course, right? There's nothing perfect about them. And you don't need to even try to be perfect. All you had to do was be a bear and know how to swing trade. That's it. And then, of course, do it. That's the hard part, right? Actually doing it. Okay? And check this out. Next week, this will be the sell zone. Okay? And then you're going to say, well, Wayne, how do I know this isn't going to double bottom? Well, you don't, son. So you better make a decision. Okay, so there you go. So there's the plan that we've now tracked for how long have I had that set up now? 3 weeks, 4 weeks? Cool, 600 pips, bro. Plus 300% a year in interest. Okay? Okay. Not necessarily the S2 part. Remember, that's not the pattern I've asked people to learn. Right? Not M3 to S2. That would not be correct. You're generally correct, but that's not correct. You would lose half points if you were graded. So here's the same trade on the ZAR versus dollar, but my analysis says this will work, but it'll be mediocre relative to the other one. And so far, I've been correct, which is great. It's the same trade, but my analysis, my inter-market analysis says this is a good trade on the long run, but on the short run, which is relative strength, the other one's going to be better. So I took the other one, and I wouldn't have made $200 in a day or 200 pips in a day. Remember, it's all relative. I'm not counting rand pips. I'm counting these trades as if they were euro dollar. So every mini lot produces a dollar a pip. Okay, I'm not counting it as rand pips. So anyways, I wouldn't have made the same kind of return because this is a mediocre trade versus the other one. This will produce later, but not today. Okay, so I would have made what, $50 here, and the other one I made $200, right? Okay, cool. I see how you apply fundamentals technically. Good, Zamo. I wrote a book called Strategic and Tactical Forex Trading. So think strategy as either long-term technicals, if you can't do the fundamentals, but really the strategy comes from fundamentals. Okay? Strategic and tactical trading. Cool. So we can carry this out now. Okay. I'll move this one -3. Okay. And so we talked about this one yesterday in great detail, where bulls are going to buy it off the 21, bears are going to sell it off here, and I don't know who's going to win. I just know what I want to do. I know what team I'm on. Okay. Yesterday we had volatility around RBA, so I got knocked out on volatility on the Aussie yen long. And remember, I discussed that yesterday too, the Aussie yen long. I'm like, look, I don't actually think this is going to go up. I just know I want it to go up. Okay? So I have a shot on gold. I took the shot. It's not going to, I'm not risking giant amounts of money because technically it's supposed to go up. So I'm going to take the shot. And I can manage the risk. And if it does go up, there's enough reward to justify the risks. So I took a shot. So the Aussie yen came down with the volatility around the Aussie news, which makes sense. I lost 3 pips because I managed my risk appropriately, or maybe I did, maybe I didn't. I survived the Kiwi, and because it didn't have the same volatility, because yes, they're related, but RBA isn't the Reserve Bank of New Zealand. They're different, so there's less volatility. Same technical trade, same fundamental trade. So I'm long off the Sunday afternoon purchase. Again, Sunday, guys. I took the trade on Sunday. Okay, if you can't do that, you're not a swing trader. Okay? Okay? You're not following the rules of engagement. Okay? So anyways, so if this is correct, we're going to continue riding this wave here. Now, we're seriously being challenged, but at exactly the price we would expect to be challenged. That we already know it's there. Okay? You see? We already know we're going to be challenged, so it's no new news. That's the known unknown is that we're going to be challenged here, so that is now known. What we don't know is at the end of the week, will we be higher, will we be lower? I just know which one I would benefit from. So if I can take the shot, I'll take the shot. So I took the shot. Now I've reduced the risk. Now I either make money or I don't. But it's not a big deal. Meh. Okay? Meh. So now it's up to the market. Okay? Okay? So am I going to make money on there? I don't know. Be a simple kind of man. Okay. Wait, if I used, all this for risk on and off mainly. Yeah. Yep. What do I mean by risk-adjusted returns? Search through the videos that I've done on Forex.Today in regards to Sharpe ratio. Okay? Okay? And it's with an E. Bill Sharpe. All right, so dollar. Okay. Okay. So we expect this to be bearish. That's great. Let's set this up from a bearish point of view. We can start with monthly, then we'll do weekly, then we'll do daily. So position trading bearish bias. Okay. Went a little too high, but remember, people are not on the clue train yet. But we did expect downward forces the very first week. So it took, we opened on the 4th. I think it took 2 days, and then we got our downward move. Cool. So that's that. Based on that, our target is 119. Okay. That's what we, yep. All right, cool. So now let's adjust this. That's our, right? Now we're going to move this to weekly to see where we are for this week. And this week we expect down. This is the first hour of the new week. Oops. The first hour of the new week is here. So all you had to do was show up and sell. Okay, yep. And our target for this week, the conservative target is here, 121, well, 121.50, 120.50. Okay, the aggressive target is 120. You see that? So that's the conservative target. And even though it's, what, Tuesday? Okay, the thought process for next week is currently this one. But this is, because it's only Tuesday, we can get lower, which is going to drag this down. And you just might find out if you reverse engineer this, that it's going to look more like that. So if we can get through 120, I would guess we're going to tickle 120, and that would produce the up and then down, right? But whatever. So it looks like we'll probably need 3 weeks. This week, next week, the week after, and then maybe we start buying this market back up. Okay. Daniel, is that one of my videos? What do Forex investors look for in a good trader? Mm-hmm. Really? Sounds interesting. I totally want to watch it. It's funny, right? I'm like, wow, I want to watch that. I am selling USD, not January, not in February. That's the big mind melt. Yeah, not this time of year. But yeah, you're totally right. Ted, you're 100% correct. I will be doing that by the end of the quarter. Okay. So if you go back to like November and December, what I very, 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 very clearly articulate is that I'm 100% bearish, and I will be for years and years and years, except during this period, it's going to gain strength. Okay. Crazy, right, Ted? I'm smoking hot like fire. When I turn, you desire. I'm fresher than you because you white. That's one of my favorite lines ever. So racist, though. So racist. Dale says it's fairly correlated. I think the euro chart is all dollar. I've learned to just ignore everything the ECB does. I think the euro is 100% valued by whatever the Fed says, which is terrible, right? Terrible. To me, it's all dollar. But maybe it's just me and my grumpy man, old state of affairs, my grumpy man mind. I can't remember what song that is. What song did I just quote? I'm fresh and you because you white. Is that Rob Bass? I think that's Rob Bass, isn't it? I'm smoking hot like fire. When I turn, you desire. Yeah, it's got to be. That's got to be Rob Bass. Anyways. Yeah, it takes two. Yeah, grumpy old man. Grumpy old man mind, yeah. All right. At least I'm fun. All right. All right. So what else? What do we want to do here? I don't know. Let's isolate Aussie. We have the Aussie news for sure. Boom. Boom, boom, boom. Okay. Here's our Aussie. Aussie seems weak versus Kiwi. Aussie seems weak versus pound. Aussie seems weak versus Swiss franc. Aussie seems weak versus dollar. And you have to remember, I was also long, so we can add another one. New chart. Okay. I was long Aussie yen, right? And I'm no longer long Aussie yen. Okay. It doesn't look that bad. You got to remember I was long in here. Probably exactly the price we're at, actually. Or was it 80? No, I was right in the middle. So anyways, I'm not in the trade anymore. I lost 3 pips. That's good for me. I don't mind losing 3 pips. I love losing three pips. Okay. So I can sit and wait. Okay. But it's not that shocking, right? If you look at it this way, like, what was I expecting? Like, ginormous rally? Like, why? But it's a shot. It's a mediocre shot. There's a psych level going on here and stuff. And it's fundamental. And it's more like I open up my chart at the exact time of day and I catch a bounce. Good. That's it. Very mediocre. Nothing interesting about it. And I got knocked out. Okay. Makes sense to me. Okay. So here's looking at it from a monthly point of view now. That's the February long. So I longed it. Any other questions? And why did it not work out? Well, we're not trending. Okay. Okay. Is it going to trend by the end of the year? Oh, for sure. Just not today. Cool. Okay. So that's it. No big deal, right? So now I wait. Maybe I'll have another opportunity on some upward movement that I see fundamentally. Or maybe I can buy it lower or even lower still. So I wait. Okay. And so you can see things like, would you buy it at that price? Would you buy it at this price? Okay. I wouldn't want to buy it lower than that. So I wait. Cool. Isn't that nice? A lot less pressure to think this way, right? So Alejandro says you can compare a bunch of these things. Yeah, well, we can already tell. We can already tell Aussie's weak. Okay, great. Great. Probably has something to do with that central bank. Wink, wink, nudge, nudge. So now what do we do? Well, you could look at which one is strongest. So maybe bust this out to a 4-hour. Make sure you got congruency based on time. Okay, they're all 4-hour now. Which one is most down? Another way of saying it is if Aussie's weak, which one is it, which one is strongest is what I'm getting to. So I actually like to put this on vertical. So let's do vertical. Okay. And which one is downest? Okay. What you're doing is now you're figuring out which one is actually the strongest, right? So you can see yen isn't very strong. Dollar is stronger than yen. So now you know, just by looking at these Aussie charts, USD yen is probably going up. Pound yen is probably going up. Okay. Kiwi yen, see this is down, this is not as down. So this is slightly up. This is Swissy yen probably is neutral. Okay. Dollar yen is probably up and pound yen is probably up. So you could look at like Beast now, okay, and see that it's generally up. And we saw all of this on the Aussie dollar. Okay. So now these traders have the same trade that I have on Kiwi, and you can see they're kind of the same. Pound is a little stronger, but there should be no surprises that there's going to be a challenge here. Okay? None whatsoever. If there are bears, they want to sell at this price. We don't know if there are bears. We don't know if there's enough bears. Okay? We also know that bulls that know how to swing trade, they're looking at an OOP, and that's right here. So right out of the training course, literally like in hour 2 or hour 3 or whatever it is, it's like, oh, in this exact situation, you would buy it here. Okay? How many people know that to be precisely true? All right? In this situation, you will buy it here if you're a bull, and you're hoping it'll go up here. Cool, right? Does it mean it will do that? No. And it's a risky trade. You're buying it overpriced. Okay? You would rather buy it down here. So if you're ridiculously aggressive, you're going to buy it and hope up here, which is another way of saying if you do buy it and you find yourself down here, you should probably take the loss. What do you care? I can't take a loss. My winning percentage will be ruined. right? No. If you lose 33 pips on this, your trading history will not be ruined. Okay. The worst thing you could do is have a high winning percentage. A high winning percentage will mean one of two things, if not probably both. One, your losers are huge, or number two, your wins are small. Okay? It's like one of these things. I have a 72% winning average and made over 3,000 pips last year. That's it? Oh my God. What? That's it? You only made 3,000 pips in a year? Holy crapola. But at least you got a huge winning percentage. Like, you almost always never make very much money. Like, it's the weirdest bragging right. 72% of the time I don't make any real money. Woohoo! Good for you. Holy crap. That's great. Now, what happens the other percentage of the time? Well, then I lose money. All right, so you never really make any money, but when you don't make real money, you lose. Like, I don't understand. No, but Michael, think Reggie Jackson, yes, and I think you're making it a different comment because I use that example in one of my courses, but what if Reggie Jackson never hit any home runs? He wouldn't be in a Hall of Fame, right? So, like, you got to have, I mean, my God, you got to have some wins. That's the problem. Like, if you only make 3,000 pips a year, how do you make any real money? Well, the conservative way is make 3,000 pips a year times 15 years and slowly grow your account size. What percentage of people do you think will do that? Pretty close to zero. So if you only make 3,000 pips a year, what are you going to do? Jack up your lot size. And you're not going to survive the 30% losses. Okay? How many people in this room made 3,000 pips in 1 month trading real money? Nobody? On? Jim? Jim made it last month. Very good, Jim. Yep. Raymond, 10,000 pips in the November-December period. Exactly. Very nice. Well, Pete, we don't know. Like, if you made 8,000 pounds on a million pound account, that wouldn't be great, right? So my point here, guys, is don't focus on the big, giant home run trades, meaning lot size. Okay? What you should be focused on is your long-term fundamental analysis of the market. And when you understand why the markets are doing what they are doing, then your trades will be worth more. Yeah, well, Pete, I didn't mean to, like, I don't need to know the size. I'm saying it in pips. The pip part is what's important, right? Anyways, I want you to focus on value creation through analysis and planning and logic, research. Okay? That's where I want your value creation to be. Okay? And I get very afraid when people say, well, we made over 200 pips last month. Oh, we made over 3,000 pips last year. You should pay us money. We have an alert service. You can follow our alert service. We made over, but you don't understand what they're telling you is bad, right? It's bad. So I would rather you learn how to plan and analyze and have small losers, which means you're going to have a large losing percentage. It's okay. It's okay to have 50% of your trades lose pips. Now, big losses? No, you're never allowed big losses. How about lots and lots of little tiny losses? Oh, that's perfectly fine. But then the trades that win, you need to let run. You need to let them run. And you won't have trades that run if your overall analysis of the market sucks. You see? So that's where I want you to focus. I know you can do this, and you can plan, you can be patient, you can be disciplined, you can be conservative, and still be quite successful. I don't want you to be aggressive. Okay? I don't want you to get rich quick. I don't want you to follow anybody else. I don't want you to follow me. Okay? I'm just trying to lay the foundation here. It's the Roger Bannister speech where you didn't even know you could break a certain threshold, but now that you do, you know you can. You now know you will do that. Okay? Do you understand that? That you can now let your winners run. Okay? You can. But you're going to need to have better analysis so that you know when to hold them and know when to fold them, know when to walk away, know when to run. Okay? Well, yeah, so it says, yeah, brokers come after the aggressive traders, right? Well, imagine that I'm working, I'm working with Traders Way, and I'm preaching conservative, disciplined trading. They're not trying to get traders to churn and burn. That's interesting, isn't it? All right. So anyways, long-term planning, analysis. So going with this, we had a similar conversation recently, and we'll talk about this, where you could short here if you were a bear, but in my opinion, that's too aggressive. But someone's going to do it anyways. But in a situation, if I was a bear, I would prefer the double top before I became bearish. That means I'm ultra conservative. We had a conversation about this. Was it yesterday? I don't even remember if it was yesterday or last week. I think it was yesterday, and I think we used Meta as an example. I'm like, okay, Meta could be a bear on this. I'm totally fine with that. And inside of that, there's like day trading, and inside of the day trading, there's market open trading and scalping inside of market open trading. Like, you can really zero down in here and do well, even if it's sort of inside the momentum of the change. You could do it, but I always prefer the second opportunity. I always prefer this one after it's rolled over, right? So if I looked at this, what I would prefer is I prefer to be a trend trader. I prefer the up. I know the aggressive open is here, so there's plan A. The aggressive, the standard move is here, so we'll call that plan B, and way down here is plan C. So I'm going to tiptoe through all of these in an A, B, or C fashion if the market provides the opportunity. Will it? I don't know. Okay? And that's the patience, the patience. Be patient. Don't push. Be patient. Wait. Okay? And if A fails, take the loss. What do you care? Okay? So the one thing to always remember is even like if you're practicing your strategies, you're trying to let the winners run a little more. Let's say you think 100 pips is a lot of pips. Oh my gosh, you made over a penny. 100 pips is a penny. One thing to focus on is if you're practicing stretching all the way out for 99 pips, are your entries now tactically good enough for a 33 pip stop loss? For some of you, 33 pips is a very tight stop loss. For some of you, it's a very big stop loss. If it's very big, lower your lot size. Here again, I'm teaching you how to be more conservative. But notice that when you place a trade, if your standard operating procedure is to place a negative 33 pip stop loss, so now we're talking about scalping and spot trading, maybe a market open trade. If you can let your winners run to be 99, do you understand that the majority of your trades can be losers? The majority. And you can still be profitable. Hmm. 66% of your trades could be losers, but you don't lose any money because your winners are valuable. Not crazy valuable, but you have to have the math work for you. Okay? So maybe focus on that for a while. Don't focus on more trades. Don't focus on bigger trades. Don't even focus on better trades. Focus on how you can turn whatever you're trading now into a trade that just lasts longer and goes a little farther. You might be surprised by the experiment. You might want to trade your normal account the way you normally trade, and then open a demo account and trade that the way I teach you to trade. And at the end of 6 months, you compare the two and find out, oh my God, you might actually make more money based on just letting your winners go a little farther. Not by doing anything different, not even by doing anything more, not by doing anything better. Just an absolute comparison, not a relative comparison. Which one did you like better? Which one makes you feel good? Or no, just right? So here's how you do it. On your demo account, when you place the trade, go negative 33, positive 99, right? So now you got an OCO and you're done. You don't do anything. You don't touch it. That's it. It either makes 99 or you lose 33. Then on your real account, do the same trade, but then do whatever you want. Manage the risk. The stop, put it wherever you want, get out whenever you want. If you want to get out with 12 pips or 1,200 pips, that's up to you. Do whatever you do, okay? And then compare the two after a reasonable period of time, like 6 months, let's say. Compare the two. Which one did better? The one where you're making risk management decisions or the one where you're not making risk management decisions? And you might find out you could be, maybe not your worst enemy, but you could be the one in the way. It might be your emotions like, oh my God, I made 50 pips, get out. 50 pips? Well, if you made 50, why can't you make 100? Okay? And I want your value creation to be based on the worth, because here's the next step. What if you find out the one where your test account does better than what you actually do? Then you say, well, if the trades are worth 99, how many of them are worth 150? You might find 70% of the time, if you make 99 pips, you'll make 150 pips. Because it was just doing. And the market doesn't care how many pips you make. It doesn't even look at it. Nobody cares that you made 100 pips, right? So now you want to do scientific methodology and find out, oh my God, I normally get out with a 50 pip winner, but most of those went to 99, and most of the ones that went to 99 went to 150. And you're like, oh my God. So, right? So let's say most and most. So 33% of your trades that you got out at 50, 33% of them are worth 150. And all of a sudden you see, but you didn't do any extra. Your alpha is that you know to let your winners run. So I'm not saying trade better, trade more, trade bigger. I'm saying use scientific methodology to analyze how much value you actually create. You don't want to just simply add liquidity to the market for big institutional investors. Because if that's all you do, if you're not really creating value, all you're doing is creating volume, right? Liquidity. All you're doing is creating liquidity so that value creators can execute their plans better. Because if you're always around, if there's always mediocre traders around, there's always going to be those mediocre traders to fill your trades. You'll be able to get out at the top. You'll be able to buy at the bottom, exit at the top, buy at the bottom, exit at the top, because there'll always be dumb money willing to take the opposite side of the trade. Think about it. If you're taking profit at the top, some idiot is taking it from you and wants to get in. Maybe that's wise, maybe it's not. But the thing is, you'll always have the liquidity to do whatever you want to do, and that's great. But you don't want to have a career providing liquidity to people that are creating value. Azerbaijan! Oh my gosh. BC? Woodsman? Yeah, I'd love to visit. Oh man. Meet you in Baku. First year you only have 30% success but 24% return. Yeah. Very cool. Chinesium? No, I don't know Chinesium. But very cool. All right, so, yeah, I guess we'll leave it there. I'm spent. I have a question here. What risk reward would you recommend for a scalper? Scalpers don't have such things. What am I going to tell you? You should risk 12 pips to go so that you can make 15 pips. But what about your spread? I mean, I don't think that way. I'm sorry, I don't think that way. I scalp into trades, but I still want to make 100 pips on a trade. Yeah. All right, so anyways, peace on earth. May the pips be with you. May your profits be above average. Smell you later.